Hey guys, it's Tony. Good morning. So I did want to go into the importance of diversification in your portfolio or in your crypto portfolio, right? I mean, there's a reason why I hold various amounts of different altcoins and major crypto, right? So my major cryptos are going to be Ethereum. I hold about three right now, I think. Yeah, so three Ethereum for ADA. I am holding close to about, I'm holding 5,000 ADA right now. And then Polygon, I'm holding around 6K. But I think I don't hold any Bitcoin. I don't have any Bitcoin right now. The only reason that I don't have any Bitcoin is because I actually just traded on Forex. It's like my main thing. It's like the main thing I trade on my Forex account, right? Just Bitcoin and Ethereum. Um, but like the main thing that I wanted to talk about is diversification in your crypto portfolio, and the reason I say that is because I added a nice chunk into Shiba Inu a couple of days ago, like before the actual run. So I bought it right when we were trading sideways, right? So I mean, you can see here, the very first time that I bought it was at point zero. Well, I actually got it at point 0.000007. So I got it like what, like three times cheaper than it is now. I got it like back here, 0.007, like right there. That's where I bought it, right? And I also did the same thing on Coinbase. So altogether, I think I hold about half a billion Shiba coin. But the importance of diversification is if you have major altcoins, right? If you have major crypto like Ethereum and Bitcoin, they're going to fluctuate along with your altcoins, right? And then if you hold only like one or two, then your whole portfolio depends on just one or two cryptos going up and down. But if you have a nice good diversification, but again, this is more important when you have a bigger account as opposed to just like $1,000 account. If you have like $1,000 or $100, you should just throw it all into one crypto and cross your fingers, right? Like you're not gonna grow it to some insane amount by diversifying $100 or like $1,000, right? If I had to start with $1,000, I just throw everything into one and cross my fingers and see what happens, right? But the thing is here, like the reason I like diversification is if I have like, for example, Ethereum or Cosmos or Bitcoin or something like that, or Doggy like run up really really hard and everything is kind of like in the red, I have that portion of my portfolio always green, and then when that trails back, then you start having you know crypto like Anchor and Polygon run super hard. Especially Anchor. Anchor's been doing pretty well for the last week or so. Last week it did like a 16% run, or is it 9% run? Yeah, 9%. Still down 7%. But what I'm trying to say is that, when you have one portion of your portfolio running, the other portion tends to go red, but they're all pretty evened out, right? And if you have really good projects and really good crypto, they're all going to go to the upside eventually, especially if they're good projects, they have a good backing. So that's why I hold like most of the major crypto, Cardano, Polygon, Anchor, Ethereum, Chainlink, Cosmos, Polkadot, Stellar Lumens, et cetera, et cetera, right? This is why I like the diversification, and I don't just add a bunch to Ethereum. I don't just add a bunch to Bitcoin or to like Shiba or whatever, because it's when it comes to rallies and when it comes to drops, you tend to have different drops and different rallies at different times. And when you have Cardano running, Polygon might go down, and then when you have Polygon running, might have Cardano down, right? So it's just a good idea if you have a bigger portfolio to diversify. I don't recommend if you have like 100K in crypto to just have it in if you just have it in Bitcoin or Ethereum, that's perfectly fine. But if you start adding altcoins, don't put 100K into like Polygon. Don't put 100K into Anchor. Don't put 100K into Cardano. Split it up in like three ways, right? And that way, if you actually have, if the overall market is down, obviously your portfolio is down. But if they start running at different times, it kind of keeps your portfolio at a steady level until everything starts rallying together. So always a good idea to diversify. I think it's a fantastic thing to do if you have a bigger account. But if you have like $1,000 or $2,000, I say you just, I'm not saying that's a small amount. I'm just saying you can't really do much with $1,000 if you diversify that into like 10 different crypto, right? No. You have $1,000, throw it all into Anchor, throw it all into Chainlink, and then just like I said, cross your fingers, and hopefully that thing like does like a 10x. And then once you have like that 10K, then you can start diversifying and putting, 3K into like separate into separate tickers, and then that $1,000 that you have left, throw it into a fool's insurance like Shiba Inu or Doggy or something, and then just kind of see what happens. But diversification, if you have a bigger portfolio, definitely should be split into a bunch of crypto or altcoin if you want to have it that way. I personally don't like having just one position because I feel like your portfolio depends on that too much. Unless you really believe in the project, right? But that's really it. Just wanted to explain the importance of diversification and how one portion of your crypto can hold up the other, so that way you constantly see growth in your portfolio. So I'll see you guys later. Bye bye.